Mahindra and Mahindra Q2 profit surged 18%, beat estimates. What led to the positive quarter? We spoke to Anish Shah, Group CEO at Mahindra and Mahindra. Hear him out. Not too many companies can say we were marred by the GST transition and delivered 22% on the base that you did, right? So the mind thinks of what could have happened if there was no GST transition. But are you happy with the quarter two performance?
I am delighted with the performance, largely because all our companies have contributed in a significant way. So from a profit standpoint, at the consolidated level, we're up 28%. Farm is up 54%. Mahindra Finance, 45%. TechM, 35% on an operational basis. Growth Gems, 22%, though we don't look at profits as much because we're investing for the future and we will see profits grow significantly in the future. And Auto up 14%, which is an impact in the short term on the GST transition, but that's made up in October. And overall, we see all our businesses literally firing on all cylinders.
And therefore, I'm presuming that moti for all the businesses, you believe the momentum continues into quarter three, quarter four, let's say the next 12 months?
The economy overall is in a very good place. And,
you think so?
We see the GST change being very positive for the economy because it's created a sentiment change. The fundamentals were there, and that sentiment change has helped, and that's what we've seen through the festive season. We see that momentum continuing post the festive season as well. Obviously, it can't be at the same level as festive, but momentum here is much higher than what we usually see as a drop-off from festive in past years. And whether that continues through quarter four, too early to say, but on balance, we see the economy on a good track.
Okay. Now, just divvying it up into two or three segments. Firstly, the farm equipment for tractors. Did I get that right? That you believe, that industry will grow much higher. You are expanding market share through the last 4 quarters as well. What could have happened in quarter two, a slight dip here and there, maybe. But broadly, you believe that you might maintain or improve market share in an industry wherein you believe from 5-6% that growth could be double digit. So therefore, out there is no holding back on the growth guidance, formal or informal, that you might give, right?
So we have given that guidance of low double-digit growth for the industry.
Yes.
We have grown market share in this second quarter as well by 50 basis points.
Okay.
In the month of October, it was just slightly lower than what we would have liked. But on balance, the farm business has done just a fantastic job in execution. And that is driving the growth that we see in profits.
And it's not just the top line growth or the volume growth in the farm equipment, right? I believe your PBT margins as well, 19.7 if I'm not wrong. This is the record that you've done, right?
That is correct. Our PBT margins have grown and grown consistently over the past many quarters.
Right.
So that combined, and that really is a reflection of strong execution, that combined with the go again in market share and the volume growth for the industry has helped deliver some very strong results.
So if you moved from, let's say, 15 to 17, if I can call that as a range, to now 19, 18 to 20, whatever range you may want to give really, I would love to know the range. But is this the new structural shift to a higher baseline?
There are various factors that go into it. Commodity prices is a key part of that. So if that changes, then that equation might change as well. What we have been able to show is through cycles, we've been able to maintain a stability in margins. And that is important from our standpoint. We've been able to have largely pricing reflect whatever pressures we see, but at times when commodity prices go up much higher, then that creates a much greater pressure, not just for the business, but for our customers as well.
But difficult to call that this is a baseline number now. Like think of 18% or 18.5% as a baseline, and you'll probably do above.
We've in fact maintained that baseline for many years now. So you may see some blips around that, but it's largely been steady from a margin standpoint. And we have shown that chart in our analyst presentations and media presentations over time, just to show that consistency of margin over the years.
Okay. Auto. Now tell us a bit about this because, customers can't stop raving about it. I would love to know, how do you, and it was a quarter or at least 1 month of the quarter or 1.5 months, which were kind of impacted by this GST transition?
I'd say less than a month.
Less than a month.
Yes.
Okay, less than a month.
Yeah.
And we know that October was great. The numbers showed it. You believe it is continuing to November, and therefore the headline numbers on volumes, the ability to crank up operational metrics because of volume growth, etc., will show in quarter three?
Yeah, we are not too worried about the transition part. That is made up in October largely. Some of it will continue in November. So yes, we do believe that some of that momentum will continue. And if we look at a longer term view for the business, for this year we have committed to a mid to high teens growth for SUVs, and we are staying with that at this point.
Now I know, I kind of half know the answer, so I shudder before even asking the question, but I'm still asking you, right? The intensity of competition is now picking up because a lot of the local peers or competitors of yours, as the case may be, are on verge of launching products over the course of the next 6 to 9 odd months. Could that lead to pricing intensity or competitiveness, part one? And will that have a bearing on the kind of performance that your EV segment in particular throws up? Because, I mean, your PV margins, if I'm not wrong, about 10 and a half, right? And the EV one drags it a little bit. Would you have to continue doing that, and therefore does that have a problem there or an impact there, if not a problem? Sorry, problem is too strong a word.
Neeraj, in this space, as you know, competition has always been intense.
I knew the answer, yeah.
We felt greater intensity in the past, but it made us better. And I go back to 2002 when we launched the Scorpio. A lot of folks gave us, had written us off as dead because all the global majors were coming into India in a very big way. And they said that they're going to take over the auto industry, and M&M is not going to survive anymore. So we've gone through that multiple times through our journey, and every time we've come out stronger. Today, with the investments that our past leaders have put in place in the Research Valley in Chennai, in the teams that have been built, in the quality of our products, we are actually far stronger than we've ever been before relative to competition. We're competing with some of these global majors in markets around the world, and you see our numbers for exports are up 40% this quarter from a volume standpoint. So that is a reflection of how we're competing well in markets around the world. So at this point, I'd say competition's a fun thing to do, and it makes us stronger. And we have a set of products that we feel are very well positioned in the market.
When I start a business, I know how to give answers after I talk to you. Yeah, so that is one thing. No, but on a very serious note, I mean, there is competitive intensity going up, right? Could that have a pressure on your pricing and thereby the passenger vehicle division margins, if you will?
We don't see that as a problem right now, because we have a set of good new products coming in, refreshes coming in, and that's something that will help us. And also, our current products today are just very, very strong. So the quality of those products is going to be difficult for folks to be able to match. We are on the other side of the table now as compared to where we've been in the past, where we were improving significantly, and that heritage that we have of being able to work with competition is helping us at this point.
All right, that was the conversation with Anish Shah, and M&M, really the stock of the morning in that sense. Cooled off a little bit, but the RBL block deal has also helped out definitely.